Jobless claims rose slightly last week, another sign the labor market is cooling somewhat. But is it cooling fast enough for the Fed to start cutting rates soon? According to the latest CNBC Delivering Alpha survey, 54% of respondents expect cuts to start in the second quarter of next year. Our guest happens to agree with that. Joining me now is Gus Faucher. He's chief economist at PNC. Gus, welcome to you.
Thank you very much, Kelly. Pleasure to be here.
So when we talk second quarter next year, April, May, June, that kind of time frame?
Yeah, I think we're talking more towards the end of the second quarter, beginning of this third quarter, rather than in the early spring. I think the Fed wants to be sure that inflation is slowing more towards 2%. It's certainly moving in the right direction. But, you know, with the economy remaining strong in late 2023, and it will continue to remain strong in early 2024, I think they're comfortable keeping rates where they are in the near term. And then once it becomes more apparent that inflation is slowing towards 2%, they can cut then.
All right. So your base case is kind of the positive disinflation story or the worrisome kind?
I think it's the positive story. We've seen a significant slowing in inflation, particularly on the goods side over the past year. Housing inflation has been a problem, but that's likely to slow in early 2024 with rent growth slowing dramatically. And so I think that we will see slower inflation with still solid growth in the first quarter of 2024, and then that would give the Fed some leeway to cut rates in the middle of next year.
And I guess the question then is, if this is already priced in, and Gus, that's where I wonder about the pendulum swinging back to the other side now. We're talking about March. I think Goldman and some others are talking for the first cut January, some people think. So the market's really off to the races with this. And what do you think that tells us about the level that we're seeing bond yields at to close the year?
I think that markets expect lots of rate cuts in 2024. I'm a little bit skeptical about that story. I think that if growth remains solid, then the Fed will say, you know, look, we can keep rates where they are in the near term, make sure inflation is moving to where we want to be, then start to cut rates. I think if you see a lot of rate cuts, that's actually bad for the economy because that's an indication that things are slowing more quickly. So I expect with still solid growth and with slowing inflation, we'll see the Fed cut a few times next year. And then that sets the stage for solid growth in 2024, slower than what we saw this year, and then expansion in 2025 as well.